And taking a look at Mad Markets today, Paul Theron of Vestact with me in studio right now. Let's take a look at Libya and all that's playing out on that end. We've had that considerable news flow and it hasn't seemed to have affected the markets just yet, Paul.
Yeah, look, I mean, there are graphic scenes of Muammar Gaddafi's corpse on other channels and people being interviewed, asked what they think of the whole situation. My favorite one was a woman who was asked about what kind of Libya she'd like to live in, and her comment was, a Libya where people don't fire AK-47s into the sky. So we know that instability in Egypt hasn't resulted in any kind of economic progress, and that market's down heavily. Libya is not a major player in terms of its corporates and its markets, but we know the significance of its oil supply arrangements with the Italians and so on. Look, it's a politically sensitive and charged issue. Not everybody's viewing it in the same way. But at the same time, it's amazing how much change there's been in North Africa since the beginning of the year, and one can only imagine where this thing goes next. Absolutely,
but as I said, no market reaction to the news, and of course news like this that emanates off the north of Africa being eclipsed by all that's playing out in the Eurozone territories.
Yes, look, I mean, for me, the most significant story in terms of Europe last night was Olympiacos that beat Borussia Dortmund 3-1 in the Euros. So that was a Greek team, for those who are not following, that beat one of Germany's favorite teams. So, you know, look, this weekend is certainly a lot of pressure. We know the French premier has been flying backwards and forth from the nursing home where his new baby was born, rushing back to Germany. That tells you how seriously they're taking it. Many people are...
And he, in fact, missed the birth of his daughter.
Can you believe it? Although not his first. And not her first either, so maybe that's a slender excuse.
So that enough of an excuse in your books.
But I think, look, I mean, I don't know whether things are going to get like totally signed, sealed and delivered this weekend. It's probably naive to think that. But for me, the idea that the Europeans are going to allow the situation just to deteriorate into a market negative default type situation like we had with Lehman Brothers is ludicrous. You know, they are working their way around it, and some people think they're not doing enough and they're not getting out in front of it, blah, 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 blah. But I genuinely think there's too much at stake there and that we are going to see a solution, if not this weekend, then in the weeks ahead.
Isn't it more a matter of, you know, we're not seeing it fast enough. We're not seeing that speedy decision being made.
Yeah, everybody would like the bazooka to be brought out, you know, the nuclear solution or whatever it is. Everybody would like everything to be better all the time. And it's the same when you're recovering from a recession or dealing with a debt crisis. Everybody wants immediate resolution. But at the same time, we live in the real world where, you know, politics and money make those things difficult. We know what the European scenario is, and we know that they've got political difficulties, but even those they're overcoming, you know, in terms of approving this fund and so on. So those that think it's the beginning of the end and it's a matter of time and that we're going to go off a cliff and so on, I just think that's people's own negativity coming through, not anything real.
It's certainly negativity that's spilled through to South Africa as well. It's affecting some of our own growth momentum. Let's throw forward to MPC and your expectations there.
Yeah, look, I'm not really too excited about what's going to happen here, and I don't really follow those moves too much. I mean, I was struck as I was sort of thinking about what we could talk about this afternoon, that these corporate stories that are coming through that I think are where people ought to be focusing their attention. So we saw famous brands, Mr. Price, companies like that. And for me, what's exciting there is your earnings are just kind of growing year after year after year. People think these markets are tough and that you've got to like get a lot right in order to make money in the market. But you don't really. You just have to buy stocks like that early on in their corporate development cycle and you'll be making.
Is it too late for the retailers?
No, I don't think so at all. And the fact that you've seen such good earnings growth is exactly why people are prepared to pay the forward multiples that they do pay. And that's because this is a growing economy and these are businesses not subject to a lot of regulation.